How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, options trading course. And what we're really quickly going to talk about is how to find flawless exit as an options trader. And the reason why I'm covering this, and this is something I cover inside my class, but I'm going to kind of bring this to the forefront, is because I hear this question a lot. And what's interesting is that when I was learning how to trade options, and I really learned how to trade options by reverse engineering other people's plays, is that I never had the question of, right, how to find exit as an options trader. It was never something that was challenging to me because to me coming into it, I kind of understood like how to kind of wrap my brain around it. But I see that so many people have this particular challenge. I decided to go ahead and do a video from this and to kind of to give you an understanding of some of the kind of things that we teach people in my particular program. And one of the biggest things is how to exit out of the play. So how do you get into the play? How do you get out? And it's really not as difficult as people make it, but a lot of it has to do with conditioning. So one of the biggest challenges that a lot of people have is finding the exit is because we're not socialized and we're not conditioned in this particular society to understand how to manage capital. So capital management is not really supposed to be our assignment for the majority of us. The majority of us are supposed to work and consume and work and consume and work and consume and work and consume. So we're just supposed to figure out how to consume more if we make more money. So managing of capital is one thing, and then there's another level of management of capital in a fluid and volatile situation like the market. So you can manage capital from a standpoint of, wait, I'm going to buy some real estate. I'm going to get 11% a year over the next 10 years. And then you sit your money in the real estate, and that real estate market, unless the whole market tanks, is relatively stable and not volatile. When you're in the financial markets, when you're in the equities markets or the bond markets, you may be dealing with a scenario that it could be very volatile. You could have issues of massive liquidity. You could have issues of lack of liquidity that can change the value, right, of your particular investment or the asset that you put money behind. And you have to learn how to manage all these variables and all these conflicting issues and understand how to manage this all at the same time, and then figure out how you can exit and be in a profitable situation. And I think that's the biggest challenge for a lot of people, is that they have not been socialized how to manage capital properly. So what we're going to do is that I'm not going to really explain the whole process in which I teach this, because I really feel that if you can just learn how to manage capital properly and you can understand the criteria of capital management, that value is 10 times worth the value of the course. But you have to understand how to apply that to the right situation. If you're just trying to get the information so you can use it as a piece of trivia in your brain, but you're not going to apply it to the real world, you won't see the same value. You understand what I'm trying to tell you? But what we're really quickly going to talk about is that how to find your entry and your exit point as an options trader. So really how to manage capital, right, as a trader. So it's really, really simple. First thing is that you want to buy in the money or at the money as a trader. The first thing I teach option students, right, is that as a novice trader, to put yourself in a position to be safe, right? And there's really no real safety, but to try to manage your risk, right, effectively, I would say, is always as a novice, until you really get seasoned and you start getting a lot of trades under your belt, always buy in the money or at the money. So in the money, which means underneath, when I say underneath, I mean lower or higher than the actual strike price. Right. And you'll understand that once you understand what I mean by calls and puts. And then also either at the money. So right at the strike price. So have the strike price be equivalent to the share price of that particular option in stock. So the stock price is at 1, 2, 3. And the actual option that you're going to buy at the money is also going to be 1, 2, 3. And that's the easiest way to manage the risk associated, right, with buying that particular option. And I recommend that everybody as a novice do that. Once you get more experience, you kind of understand the market, you have a better understanding of that company, you can start buying out of the money. But buying out of the money is a lot riskier. So you got to be a lot better at managing risk from that standpoint than managing the risk with buying in the money or at the money. So it's easy to find your entry. What's your entry? Your entry is either in the money or at the money. That's your entry. And when you're looking at your particular brokerage account, normally everything in the money and at the money is going to be color coded. So they're going to have one shade for in the money and at the money, and then they're going to have another shade for being everything out of the money. So they're going to be color coded so you can know what already is in the money and at the money. So you don't have to guess. A lot of people like to look at break even. We'll go into another video on that, why that don't really make a lot of sense, right? But what I want you to really focus on is that look at in the money and look at the money, right? And as a novice trader, look to purchase your strike or make your strike, right, in those particular categories. That's the first way to find your entries, because everybody's really concerned about, well, where do I go in at? Go in right there. If you can't afford those contracts, then you want to consider not buying the stock. I'm sorry, let me retract that. If you can't afford those contracts, you want to reconsider not buying the option, not the stock, right? You want to reconsider not buying the option. And then as you get more and more experience, then you can start going out of the money, right? Which are a lot riskier, but maybe if you really understand the play at a higher level, because this may be a situation that you've been observing for a very, very long time, then you can understand how to manage the risk associated with that particular situation. Second thing you want to do is you always want to determine your exit before you buy, right? This is fundamental to being a trader. Before you ever buy the contract, what profit percentage or dollar amount were you willing to exit at? Many people are buying and they're waiting and they're hoping that something happens. This is like how they've been taught to deal with capital, right? So they buy and they wait. And I think if they think that somebody or something's going to happen where they're not going to get the urge to exit, you have to know before you go in where you're exiting at. So before you ever get into the situation, where are you going to exit? So we always talk about before is that a lot of people take problems that they've already had in their life, they bring them into the market. What do most people do in life? They go into situations that they don't know how they're going to get out of the situation, right? So they wait for the situation to expel them instead of them knowing how they're going to get out. So before you ever bought a contract, what return were you looking to get? And when you hit that return, that's where you're going to make your exit. Second thing is on your loss. If you incur a certain amount of losses, where do you exit at? So don't be worrying about break even, what strike price. No, same thing. If you lose a certain amount of money on this contract, where will you exit at? Right? Because those conditions can change. But if you come in saying, if I take a 30% loss on the exit, it doesn't matter what else happens in the world. Once you take the 30% loss, you exit. So what is interesting is that a lot of people have been taught to focus on extenuating factors instead of what is the most important thing: risk management of capital and appreciation of capital. All the rest of the stuff, the break even, right? The delta, these other Greeks that everybody wants to focus on, those things can change minute to minute, moment to moment. But if you come in saying, this is what I want to exit out on the profit side, this is what I want to exit out on the downside, well, then you already know your entry and your exit. So your entry and your exit is not contingent upon even share price. It's contingent upon the return on, right, the capital and the loss of the capital, which is all you're supposed to be focused on anyway. I don't care about strike prices. I don't care about share prices. All I care about is risk management of capital and return of capital. And when you start to think like that, now you're thinking like a person whose job it is to manage capital. So you really got to start focusing on your identity, right? And seeing yourself as a manager of capital on behalf of you, your group, your family, whoever. But people that managing capital focus on management of capital. They don't worry about strike prices. They don't worry about Greeks, right? They don't worry about what Kathy Wood did. They worry about management of capital, right? Risk management of capital and return of capital. And the extenuating factors, do they play into what is going on? Yes. But what's the most important thing? What's the foundation, right? And that's really what's going to move the needle for you. And once you start seeing yourself and start taking on that identity of a person whose job it is to manage capital on behalf of yourself and maybe your family or maybe your group, then it's going to change how you make decisions about everything. And once you start to understand that you now, before you go into a situation, you've already determined your exits, good or bad, it will change how you make decisions about everything. Because many people wait to get expelled from a situation by another group of people instead of going in and saying, well, you know what? This is what I'm looking to get out of the situation, good or bad. And when I hit those particular milestones or benchmarks, this is when I exit. and I don't wait for another group of people to exit me out of the situation. You understand what I'm trying to tell you? So part of the things about being a trader is taking 1,000% responsibility for your actions. And that's what a lot of people struggle with, because like we said, is you have not been assigned, right, these particular positions in society. So therefore you haven't been socialized to make these type of decisions. So part of what we're trying to do in the program is create an identity change, create a transformational change on how you see yourself. And then therefore, once you see yourself differently, you'll make different decisions, which will then do what? Start changing what goes on in your life, start changing your reality, and allow you to start getting different results from your life. So that's pretty much the end of how to make flawless exits as an options trader. Relatively short. It's not that complicated. It's not that difficult, because all you do is you focus on the 2 or 3 fundamentals that we talked about in the video. If you have any questions, hit me up in the comments. If you want to know more about the highest paid part-time job in the world, hit me up in the comments or click the description link. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.